Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, June 17, 2010. It's 11:30 a.m. Eastern Daylight Time in the U.S., 4:30 p.m. in London, 12:30 in Hamilton, and in Mexico City it's 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We have we have our own vuvuzela here. If you've been watching any of the World Cup, you know what that noise is. I'll tell you, I don't know how people can watch those games and those matches and not be preoccupied with that. So, but the big news in the UK, in the city anyway, is the reaction to Exchequer Chancellor Osborne's speech about the demise of the FSA. That's still being sorted out. As we also speak on American cable TV, the lambasting of the BP executives is occurring in front of Chairman Henry Waxman's Energy and Commerce Committee. It's high drama. Every congressperson is utilizing every second of their allotted time to tell of their outrage over the foul Gulf shore. And we'll go to some of the details of yesterday's meeting with the president. Here's a photograph. This was on the front page of the FT. I'm sure you've seen it. President Obama on the right. To his right is Vice President Obama, and across the table from him, excuse me, is Tony Hayward, and then behind him is the chairman of the company. There are a lot of questions now as to what's going to happen. BP agreed to set aside a $20 billion pool of money that would be administered by a third party in order to pay claims expeditiously. BP also agreed to give up its dividend for the first quarter of 2010. It also agreed to defer the dividends for the next 2 quarters. The results yet of that decision as pertaining the British pension holders as a group have not yet been felt. However, the insurance industry is coming in with some views on this. They're saying that the $20 billion pool really will have little impact on their obligations. It's been determined apparently that Kenneth Feinberg, who handled the World Trade Center funds distribution, is also going to be the administrator of this new fund. He seems to have a revolving job in this role. If the BP fund operates like the earlier World Trade Center program, people and businesses affected by the spill will likely receive less money from the fund if they have insurance that covers some of their losses. That makes sense. The insurance coverage might not amount to too much, actually. Estimates are that insurers will only pay $2.5 billion to $3.5 billion in claims, which is just a small part of the $20 billion that BP has agreed to put into the fund. Some people have weighed in on this, one being the former superintendent of insurance for New York State, Howard Mills. He said that companies with business interruption coverage wouldn't carry nearly enough protection to reimburse them if they face years of revenue decline. That would leave the BP fund on the hook for a substantial portion of those losses. Mills notes that people such as AIG, Travelers, and Hartford actually sell BI coverage to commercial clients, and he went on to say there's no business interruption insurance that would cover an entire industry being wiped out, such as, for example, the shrimping industry in the Gulf of Mexico. One view that's coming up, this is coming from Anderson, Kill and Olick, which is a law firm that represents clients seeking to collect from insurers. The existence of the fund might end up being cited by insurers as a reason not to pay some claims. Some policies may contain language that says other means of recouping costs must take precedence over the insurance policy, and we could end up in some drawn-out litigation as to which claim fund pays first. So it's a little bit of a mishmash. Tony Hayward, as I say, is being blasted by Chairman Waxman and others. As soon as we finish the show, I'm going to go back and watch it. Some other voices have begun to pop up. Transocean, which is the owner of the well, and Andarco, which is a minority partner. We'll get to them in a second. Here's the Transocean well in better days. The CEO of Transocean is saying that his company is not responsible for, quote, listen to this, fluids emanating from the well. Apparently he's trying to lay out a limited role for his company as the cleanup costs mount. Yesterday he was testifying in front of a U.S. Senate subcommittee. He said that the Oil Pollution Act, which is a federal law, says that his company is, quote, responsible for fluids originating from the rig above or below the waterline, but not for fluids emanating from the well. When it becomes clear what types of liabilities are allocated to the rig, which was actually owned by his company, the CEO, Mr. Newman, said that the company will work with the National Pollution Fund Center to pay legitimate claims. He, of course, also noted that his company served as a subcontractor subordinate to BP, and that he viewed BP, Anadarko, and MOEX as well owners or partners of the well owner. MOEX is a Mitsui subsidiary. Of course, his statements are marking an attempt to set out a relatively narrow role for Transocean as these spill costs really rise and rise and rise. Let's get to Anadarko. Anadarko is a minority partner in the actual well-owning partnership, if you will. It may be, it's not confirmed yet, that a clause exists in the BP Anadarko contract that could limit the liability of Anadarko. That contract supposedly is similar to others used in offshore drilling in which the operator, i.e. BP, assumes the costs of mistakes in case of gross negligence. If you're a lawyer, your antennas are popping up. Anadarko owns 25% of the well. It's seen its share drop 40% since the well accident. And people associated with the company are bracing for what could be a proportional share of the cost resulting from the leak, which obviously could be many billions of dollars. However, now that it's been confirmed that the joint operating agreement with BP contains a gross negligence clause that could substantially reduce the company's potential liability, as well as Mitsui, if BP is found to be guilty of gross negligence, then they'd be on the hook for 100%. Now, the only possible evidence that BP has been liable for gross negligence so far is coming from U.S. lawmakers, i.e. the Congress, which is hardly a objective standard, but they're saying in public that BP made decisions that increased the risk of a blowout at the well to save the company time or money. BP hasn't answered about anything concerning this. Anadarko did say this morning that it has already been invoiced by BP for its share of the cleanup costs, although it didn't disclose the amount. So the lawyers are beginning to move. Well, after all the fanfare, this man won't have to hide anymore. Of course, this is Joseph Cassano in his very posh Belgravia home. He was the head of AIG's financial products division and was allegedly the man single-handedly responsible for forcing the largest insurance company in the United States into bankruptcy. As if one person could do that all by himself. Well, the Securities and Exchange Commission has dropped its investigation into Mr. Cassano. Cassano is no longer the target of the SEC's probe. This is according to his lawyers. Last month, the Department of Justice dropped its criminal probe of Mr. Cassano's activities. His lawyers said, "We're pleased that the SEC, like the Justice Department, has decided to close its inquiry." He went on to say that the SEC demonstrated the utmost professionalism in this matter. The SEC has also dropped their probe into Andrew Foster, who worked for Cassano at AIG's financial product unit. For their part, AIG, who supposedly was taken to the cleaners by Mr. Cassano, said, quote, "We welcome the SEC's decision and we continue to cooperate with other authorities on their assessment of these events as we focus on strengthening our businesses and repaying America's taxpayers." The SEC had no comment. Well, we'll see what happens here. If you're trying to figure out who was responsible for whatever happened to AIG, I guess you're not going to be able to look at Mr. Cassano and Mr. Foster. The stock market's down about 51 points now. We had some bad unemployment numbers, as we'll get to right after the break.